Hi, everyone. It's Joe Veneri, the host of Fit Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today, I'm joined by Nate Raabe, managing partner at Rx3 Growth Partners. In today's episode, Nate tells us about partnering with Aaron Rodgers to start Rx3, how the firm uses influencer investors to add value, and we learn about their investments in companies like Hydrow, Hims, Super Coffee, and CorePower Yoga. Hi, Nate. Welcome to Fit Insider. Thanks for joining us.
Joe, thanks so much. Happy to be here. Appreciate the invite.
Yeah, definitely. We'll just kind of get right into it here. I think it'd be best if you tell listeners some background about you and what you're working on at Rx3.
Yeah, absolutely. And again, thanks for having me on. Fan of what you guys are doing at Fit Insider and what you and your brother have created here. So again, I think it's very relevant, and especially for a fund like ours with Rx3. So a little bit about Rx3. We're a first-time consumer-focused influencer fund based in Newport Beach, California. And we say influencer fund because we have a number of kind of professional athletes, both current and former, and influencers that are true LPs in the fund. So we really look to align ourselves with consumer growth brands where we can provide value beyond just capital. Started the firm along with Byron Roth from Roth Capital, as well as Aaron Rodgers, quarterback for the Green Bay Packers, a little over 2 years ago, with the idea that equity is worth more than cash to a lot of these influencers. And when there's an authentic relationship to the brands and you invest in the brand with equity, you're kind of properly incentivized to help promote, endorse, and support the brands beyond maybe if you are taking cash or something from the brands. So we're a little over $50 million funds, and we're about halfway deployed. And so far, so good.
Yeah, there's a couple things in there that, the reason I wanted to reach out and have this conversation and share it with the audience that I thought was particularly interesting. One being this idea of influencer investor, the tie-in with the athletes. And the second, within the fund have gone on to do some kind of health, fitness, wellness focused investments. So we'll get to both of those. Maybe the first one first. When you're talking about the influencer investors, how did you guys come up with the roster of folks that you wanted to approach? Maybe initially starting with Aaron Rodgers, and what's the pitch to them to get them on board?
Yeah, great question. I've known Aaron since college, about 18 years now, back in the Bay Area. Started doing business with him about 5-6 years ago. And, what you notice pretty quick is that Aaron and other athletes get access to certain deal flow. They can kind of move the needle just by even being an associate or being on a cap table. Able to get different preferences, and a lot of times can move the needle if there is that authentic relationship with the brand. So we did some one-off investing, and then we noticed that private investing by nature can be have a little bit more inherent risk to it than some of the public companies. There's lack of liquidity, so there's a lot of things that make it riskier, and maybe not a traditional investment option for a lot of athletes and influencers. So we said, and the other thing, I guess, that was part of that is with Aaron and I, we would do a lot of investments, but then, he's having to attach his name to a lot of different brands. We said, I think there's a better way where we can kind of mitigate some of that inherent risk of investing in early stage or private companies, as well as still take advantage of the access to deal flow, being able to help these brands by doing more of a portfolio approach and bringing in other athletes and influencers, kind of a team approach. So you have a pooled value add to these brands versus just having the onus on one individual athlete or influencer. So that was kind of the original thesis of, I think there's an opportunity or something here with Rx3. And so we went out to, we've been through Aaron and mine and kind of our partners' relationships, we've been able to we reached out to the athletes and influencers that were kind of, we had a personal relationship with first, not having that being a first time fund, we all have individual investing experience, but being there as a first time fund, we don't have any institutional investors. It was everyone that's in the fund to date is someone that knows myself, Aaron, or Byron personally. And so those are the kind of the calls that we went to. And I think you're starting to see more and more athletes that understand the value they can have and the impact they can have with investing in certain companies with, A lot of the NBA guys do it in Silicon Valley. And so we kind of, the athletes that are in our fund are those that kind of understand and are interested in kind of learning about the investing world. And so for them, the amount of money doesn't really matter. It's more just kind of getting them involved in private investing, and kind of the education is a big part of that. So I'm not sure if that answered your question, but it's all kind of individuals and athletes that we've known. Didn't have to go very wide outside of our circle, just kind of within our athlete community.
Yeah, I think it makes a ton of sense, and certainly, answers the question when you think about them seeing maybe headlines, other athletes doing it, or celebrities certainly being involved, wanting to have a seat at the table, but maybe they don't want to put their name, brand, so to speak, out there and attach it to every deal, or maybe just need that seat at the table to understand the functions of investing, being on a cap table, having those calls. So I think it's really interesting to take that approach. When you talk about beyond the check, because I think in some of these instances, the money isn't necessarily the point, but their impact. How are they lending themselves, their name or influence, to some of the brands maybe that you guys have invested in?
Yeah, and that was a big, we spent a lot of time as we were kind of creating Rx3 and the structure of the fund. And the fund is formed truly for returns for our LPs. We're able to get unique access and do a bunch of different things, maybe than some of these other funds. But one thing that we do not do is we don't require any of our athletes, influencer, LPs to put their name on a brand just because we invest in it. But rather it's, hey, if there's a brand that we invest in and, you use that brand organically and you use it in your daily, life or routine, if you kind of support that brand, in turn, it's going to help our investment and your investment in that brand, and it's going to help the whole team. So all these athletes have they've been playing on teams since they were kids, and they really understand the value of the whole team approach. And so, there's no obligation by any of our athletes or influencers to do anything with any of the brands. But we do try to encourage them, hey, if there is a brand that you do want to get behind, by doing a social post or making other introductions or seeding it to maybe your locker room or whatever it might be, that's only going to help the brand, help the investment, and help the fund and the other peers that are in the fund with you. So there is not, we don't require anybody to do anything, but there's an opportunity. A lot of them do really lean in with the brands. And I guess one thing we would say is we have, a lot of times there's a brand that really does resonate with one of our athletes. And so we'll connect them with their team to structure a deal that makes sense for them. So, if it really is an endorsement deal beyond an investment. So we're actually a source of deals for our guys as well.
Sure. And I think maybe one last point on this idea of the influencer investor, and then maybe we'll jump into some of the specific investments that you've made. Recently, we wrote a piece for the newsletter about, the athlete investor. You mentioned it, some of the NBA guys getting involved, Steph Curry, but now Patrick Mahomes getting more involved in investing in companies, maybe like a Tonal or a Whoop,
yep,
who are using this athlete investor model. How do you see this evolving over time, is both from the athlete side, the fund side, and also these companies who really want to tap into this benefit?
Yeah, I think you're exactly right. I think this is just the beginning. Tonal is a great example. I know you had the CEO on, and we looked at, they're a great company and, raised a lot of money, and, Steph Curry is a headline, right? It's not all these traditional institutional consumer investors, which are the ones that are probably going to be more in the weeds and supporting the company, but it's Steph, who probably wrote a lot smaller check. But that's the one that they lead with. You have brands like, Laird Superfood that, just went public. And I think having Laird and having some of these higher profile people they can kind of showcase really does kind of help the brand. And you are seeing that does move the needle. I think the fact that these athletes investing in the companies is something that you're going to start seeing a lot more of. And I think it means more to the consumers where, hey, they're not talking or endorsing this product or brand because they're getting paid to do so, but they're actually writing a check and putting their own money into this brand because they believe in it that much. And I think that's something that does carry a lot of weight, and consumers today notice that. And so it is something, wow, they really believe in that brand. So they are the top of their game for whatever it is that their sport or not. And I think that translates all the way down to the buyers and the consumers.
Sure. It's a, breakthrough and kind of a noisy, crowded social media world with some of these athletes in both the headlines and social media. And now looking kind of more specifically at Rx3, some of the investments you've made, Hydrow in the connected fitness space. We've had Bruce Smith on the show, Hims, Super Coffee, Hydrant, some others. Just how are you thinking about the companies that you've backed, and specifically as they kind of fit into that maybe health and wellness vertical?
Yeah. So really for us, we invest across the consumer kind of spectrum, really. But health, wellness, active lifestyle, those are the types of brands that we can make the biggest impact, and through our kind of athlete influencer LP base. So we really look to align ourselves with brands where there is that authentic relationship where, again, we're not going to have to tell them they need to support a brand, but rather it's a brand that they're going to use or talk about anyway, because it's something that they believe in. And so health, wellness, active lifestyle for these athletes tends to be a lot of those, that theme. So Hydrow, for instance, is one that, we got involved with those guys early, and Bruce is obviously a great leader and CEO with his background as a rowing coach and what he's done for the sport. And this was one that, we got in a little earlier than we usually do, but, they're trying to make rowing, I guess, appeal to the masses, where traditionally people thought rowing was for just people that do erg, and it's not something that the total addressable market not being very big. So that was something that we had to get comfortable with. And, as you're starting to see the connected fitness even before the pandemic, that is one specifically that we started to see that trend as, the Peloton, the convenience of just working out from your home. And this is one that we were able to kind of do some seeding and get the Hydrow into the right hands of whether an athlete or influencer, and they're using it. They use it authentically, and they're talking about it because they want to show that they're a part of a very cool up and coming company and technology. And so that's one, and specifically to Hydrow. And some of the other ones, the Hydrant, which is a hydration company. You see some of the press with the liquid IV, but hydration category is I think growing very fast, and that's one that's a lot of our athletes, almost every athlete understands the importance of hydration. And so that's another one that we can kind of get behind. Just like the other ones that you mentioned, all kind of have that same theme of health and wellness, and it's easy for our LPs and athletes and affiliates to really get behind.
Yeah, you mentioned maybe getting into the Hydrow deal a little bit early. What is the typical check size criteria for investment beyond the consumer focused brand?
Yeah, so just structure the fund a little over $50 million funds, and kind of kept it that size because the check size is important. We kind of earlier in the fund we did some $1 million checks, but now there is so much work that goes into activating our network and really supporting these brands, and so we're kind of in that 2 to 4 million is our check size. And a lot of times we invest in we prefer to invest in growth stage. So a lot of times we'll come in with other funds like the TSGs of the world, Catterton, who've done one with North Castle. We'll put a smaller check in, and we'll kind of provide that incremental value add to the brands, maybe beyond what these other funds can bring to the table.
Yeah, that makes a lot of sense. And when you just maybe going a step further there, thinking about evaluating these opportunities, different investors, different funds have different criteria, filters that they use and look for. Some it's the founding teams, the team members, the technology, the category, maybe a combination of all those things. What stands out to you when you're evaluating a deal to say, like, yes, this is definitely something we want to get behind?
Yeah, so we by the nature of some of the LPs and partners that we have in the fund, we've been fortunate that we're seeing a lot of deal flow. We actually originally was called Rx3 Ventures, and we made a shift to Growth Partners because we do invest in more growth stage companies. Early stage companies are really just hard for us to properly vet and to really kind of support in the right way. So in terms of as we're the filters that we use, brand fit and brand alignment is very important. And because we're investing a little bit growth stage, we like to have a company get behind a company that shows that there is a market, they have revenue. We're not necessarily going for the 10 to 20 times return, but companies that are already kind of shown that they know what they're doing and they are going to continue to grow, and we can kind of really just kind of come in and help take them to what that next level is. So we'd prefer to kind of have less risk by investing a little bit later stage than kind of taking some of that inherent earlier stage risk. So management, just to the other point on the filter, CEO and leadership team, that's very important to us, as well as, because we do a lot of co-investors, if there's specific investors that have a lot of expertise or have had success in a certain space, that also matters to us. We'll take a look at those as well.
Yeah, and you mentioned earlier talking about not just the kind of health and wellness focus, but broadly consumer focused. When you start to think about, and especially now at a time where kind of COVID is creating and accelerating different trends and developments, and things are shifting, is there a particular category that you're looking at that maybe there's some white space or an opportunity that's untapped, or maybe even a company that you maybe wish somebody would start to take advantage of some of these trends so you could back them?
Yeah, so I think I don't think the connected fitness market has kind of reached its full potential here. I think that's going to be around to stay even post-pandemic. Just because of the convenience factor. I have 3 kids and, tend to work quite a bit. And so having the convenience of working out at your home within a short period of time, Hydrow, for instance, work 86% of your body, 20-minute workout, you get a great workout. Like you don't have to go to the gym. There's a lot of benefits to that. You start to see that with the investment world, like companies popping up between Tonal and Tempo and obviously the Peloton and the Swifts of the world. They're raising a lot of capital and betting on that trend is not going to go away. So I think there's still room in that space. And, you also kind of understanding nutrition and understanding an athlete's body and kind of what goes into your body, what you're eating and how that affects, whether Whoop is a good example of what those guys are doing. So the connected fitness and wearables, I think, is also something that's going to continue to see some of that growing. An area that we haven't invested in that I think we can make an impact even outside of the kind of fitness is in the beauty side. I think beauty is an area that we're very interested in and haven't made a bet on yet. But I think that, especially in the men's side, I think there's opportunity in kind of men's health, wellness, skincare. So those are kind of some of the areas that we are continuing to look at. Yeah,
I think that one specifically, looking at the beauty things right now that are trending, the clean beauty movement, thinking about the quality of the things that we're putting on our skin or in our body, and certainly with respect to men's wellness, skincare, all those things. One thing that tends to come up, and I've asked folks about in the past, is just where maybe the line is between wellness and health. So thinking about, whether this also applies to the food and beverage space, right? So there are a lot of different products make a lot of different claims, and they're, moving the needle towards being better for us. But is that a wellness benefit that, the perception of making us feel better, or is it a health, like science-backed? Just how do you think about that when you're making an investment? Is it, more so to the point of it's a better for you brand and therefore we want to get behind it and move things in that direction? Or is it, we have to get behind like more of a science-backed approach to some of these consumer products?
Yeah, and that's a great question. I think there's 2 categories that really stick out to me when you kind of ask that question. One is the water category. There's a lot of different water companies that we've seen recently, whether it's hydrogen water, whether it's, more oxygen water, the alkaline water. And they all kind of have different claims and, have different claimed benefits. And it's really hard, I think, for us to understand, which one of those is going to be better than the others. And I think more than anything, the winner there is going to be, there's definitely people interested in the sustainability side. But I think it's the brand becomes so important there. So I think it's how they're positioning, what is their demographic, and how they really kind of going after that demographic. And for us, it's really how are we going to be able to make a difference or kind of support that with our kind of athletes and a larger affiliate group. The other one is the protein category. There's a lot of these protein brands out there. it's hard to differentiate yourself in that category. We're actually investors in a brand called Orgain, which, that's a protein that I use, and they've transitioned to making a lot of other different types of products and bars and kids drinks. But protein powder is another one that's, I think you ask 10 different people, you might get 10 different answers of the types of protein they like, or what's important for them in terms of their protein or types of bars or drinks that they use. So for us, the science behind it is important. But it's probably not the most important thing. I think, for those, the difference is very, very small. It's more of brand fit, brand alignment, and then those other factors of the team and kind of the other variables that we look when we're evaluating a company that are probably as important as kind of, what's going to be the better water or the better protein powder.
Sure. I think that point is so important when you talk about categories like drinks and hydration more broadly. You talk about supplements, that it's so crowded and there's so many different takes on those different, ingredients that in some ways have become commoditized. Maybe when you think about, a lot of the buzzwords, then when you tack on beyond that is the brand, the community, maybe the acquisition strategy around the consumers. What stands out? What matters, like differentiating brand, community, customer acquisition? Is there something that maybe one or more than one of the companies that you've invested in that they're doing that is working, that has set them apart? Or is there different attributes that you look at from a brand and community perspective that say, yeah, this is definitely something we want to get behind?
Yeah, engagement is important. And so like influencers is a word that's kind of used very broadly, right? I think that can mean a lot of different things to a lot of different people. But really is, with a certain influencer or anybody, what is the engagement if they're talking about a certain brand that are actually going to have a community of people that are going to buy that brand or get behind that brand because that influencer, whoever that is using it, supporting it, or endorsing it. So I think engagement is important in terms of having that community, and then retention rate. So we've invested in a lot of DTC brands, subscription models, and if you have customers that are, the retention rate is high, and you continue to have customers that are coming back for not only the same products but new products that's from the same company, it really shows that there's a loyalty to that brand. And those tend to be trends that are good indicators that that company is going to be around because they can launch more than just one product. They have that loyal community of customers that they've created that trust. So if they've come out with whatever it is, a shampoo, and therefore they come out with a bar of soap, you're probably going to buy that soap because you've had a good experience with the shampoo, whatever the example is. So I think retention rate is important, and that's why I think the DTC companies, you're starting to see a lot of, almost every company has to have a DTC strategy now with the pandemic. I think that's also an area that we have been very interested in and continue to be interested in, because there's also so many metrics now that you can kind of track and see, what types of products are selling, who's buying, what is the demographic there. So you can get a lot more info now than ever before to kind of tell you, I think, is this just a fad, or is this a brand that really has a strong community following engagement where it's really set up for kind of long-term success?
Yeah, I think that fits in nicely with maybe a lot of the trends that we've talked about, that were happening before the pandemic that have now been accelerated. Connected fitness, some of the telemedicine stuff, the focus on health and well-being, the DTC subscription model certainly fits into that. Has COVID changed how you're doing business at all? I mean, I know a lot of investing in just meeting new companies is having meetings, having calls. Is there an element of this changing the way that you're doing business now? Maybe we'll do it in the future, or are you kind of itching to get back to maybe the way things were?
Yeah, I think from an investment side, it hasn't changed too much. I think it's sensationalized things and maybe sped things up a little faster, like the connected fitness, like we talked about. But I think you're also it's making companies pay more attention to their bottom line, and can't just these traditionally high growth, never turn profitable companies are having to kind of rethink of how maybe we need to look at our fundamentals of our company and see if we need to change that. From an investment standpoint, luckily our portfolio, we've been fortunate, I think, with the types of brands that we've invested in, where we haven't been hit too bad on that side. The nature of the DTC brands and some of the other tailwinds that COVID has caused. But a lot of the retail concepts, we're also in a company called CorePower Yoga. A lot of 4-wall concepts, I think are struggling. And so coming up with CorePower luckily has a very strong community approach. And I think they're going to continue to do well when things get back to a sense of normalcy. But for us, how we're looking at the types of companies it's changed, very, very little in terms of we still want to back strong brands that resonate with a broad community and consumer base where we can provide value that have kind of proven managers and CEOs. But I think you are going to see some of these trends that like some of the ones that we've talked about here, that there's going to be a lot more competition that comes up. So having that differentiator is going to be very important.
Yeah, it is. And to some extent, maybe exposing flawed business models or, like you mentioned, maybe raising a little too much money, getting out ahead of your skis. But
yeah, the one thing I would notice there too, just mention there too, Joe, is because I think you've seen, maybe some funds and institutions have not deployed capital, maybe over this period as quickly as they used to. So there is definitely a lot of capital available to entrepreneurs and some of these companies. And so I think you're going to start seeing more active investors. What I mean by that is really kind of differentiate yourself as in capital partner. So you can't just be capital. I think entrepreneurs, especially the good brands and companies, are going to be looking for something and how investors can provide additional value. What is the differentiator? We've been very proactive in finding the categories that we can be helpful based on our kind of value add influencer base and reaching out to those companies to try to sell them on, hey, we think we really like what you're doing. We want to learn more. We think we can be helpful. So I think as the companies that are around are continue to succeed post-pandemic, I think it is going to be competitive with some of the funds and institutional investors that are looking to put capital to work to get behind these brands.
Yeah, I think that's a great point. And, in your case, Rx3 kind of set up from the beginning to have a differentiating factor. And you mentioned there, in some cases, you're reaching out to these companies. Do you think you can come in and move the needle? And I'm sure in other cases, you guys, with some of the athlete investors, influencer investors yourselves, have great deal flow. Is there a kind of a certain percentage of how things break out in terms of how someone gets on your radar? Are you proactively reaching out? Is it more inbound? And I guess what's the preference in that case?
Yeah, and thanks. I noticed that little plug there, Joe, how we're differentiated capital. That's kind of what I was getting at. So any of you companies out there, we can definitely help you with our influencer base. But yeah, we've been fortunate because of, deal flow comes from a few different places. We do co-investing with some other funds. And so if there's some of the funds that we've worked with, they kind of know some of the value that we can provide to a company. They'll reach out to us and kind of say, here's a company we're looking at. Is this one that you think you could be helpful and want to take a look at with us? So we get deal flow from a lot of other funds on a co-investment side. Our athletes also send us a lot of deal flow, but candidly, a lot of the stuff that we're seeing from them is either too early or maybe in tech and not the right fit for us. But referrals are very important. I think in any business where the lead comes from matters a lot. So whether it's another reputable fund, another CEO or company that we work with that makes an intro, those are ones that we tend to maybe look at a little bit more serious. But we do have a website, Rx3growthpartners.com, that people reach out to us on and we'll take a look. But it's always better to have a warm intro, just because we do see a lot of deal flow, and that way it gets to the right person. We can properly give the company the attention that all of them deserve. But just with the amount of capital we have and the number of deals we're seeing, having that sort of warm intro definitely will help differentiate the company.
Yeah, that was what Rx3growthpartners.com. I think that's the maybe perfect segue, and we'll put the ribbon around it there. In terms of if folks are interested in reaching out, getting in touch, learning more, we'll direct them there. But I think otherwise, the conversation today and the insights you shared, really excited to share this with the audience. Just grateful, Nate, that you were able to join us today.
Likewise, Joe. Really appreciate the time. Love what you and your brother are doing, and happy to help and get involved any way we can.
Awesome. Appreciate it. Thanks everyone for listening to today's episode. For more from Fit Insider, visit insider.fit.co and subscribe to our weekly newsletter for insights and analysis on the business of fitness and wellness. Then go ahead and subscribe, rate, and review the podcast. See you next time.